I'm here with Wiktor Gromniak from the Quedex platform. Wiktor has taken some of his time out to give us some insight into what he is building and has built and been developing in the blockchain space, which is essentially, right, Wiktor, a derivatives platform. But I thought it would be absolutely fantastic to get you here so that you can talk to our shared audience and community here about what you're doing. I know I saw you doing your presentation recently on the YouTube as well. I know you're doing a lot of fantastic stuff in the space. Very few people understand it, and very few people understand why it's so important for blockchain and cryptocurrency. So we're very blessed to have you here. So just first of all, thanks for being here and welcome.
Hi, Sean. Thanks for having me. I've been watching your videos also closely, and you are covering a lot of exciting topics. The most exciting for me, of course, derivatives. So I'm very happy to be here.
Excellent. No, you're right. It's funny because I remember when I first started the YouTube channel, and I remember, you know, because a friend had phoned me. They said, "Hey, there's these things called cryptocurrencies. This is what they do. This is the blockchain." And the first question I had, I remember, was, can I buy an option on Bitcoin? Because it's so volatile. Can I buy an option because there's so much uncertainty? And back then, there was no way to buy a Bitcoin-only option. And that's really where you guys came in. And you had seen, I think, one of my first videos ever. And you were like, hey, this is important. Can we do more together on this? Do you remember?
Yeah, exactly. Actually, we had the same experiences. It was back in 2013, 2014 when we, together with my co-founder Matt, we first started trading crypto, and we also wanted to trade some more advanced financial instruments on crypto, including volatility trading and things like that. And as you've mentioned, there was no opportunity to do something like this. So this was the reason why we basically decided to build such a venue ourselves.
Yeah, no, fantastic. You know, I know a lot of people watching this from YouTube will know exactly what options and derivatives and Quedex is now because they've been on that channel. People watching this on platforms like LinkedIn who are in the blockchain space may still never have even heard of derivatives, etc. So, you know, could I ask, maybe a good way to start is, could you describe what is Quedex? What does it do? What is an option or a future? You know, from as if you were explaining it, you know, again to your grandmother. Just to help people who don't even understand where you're coming from, what you do and what Quedex actually does. Could you give some insight?
Sure. So generally, Quedex is a venue where market participants can meet and execute transactions between themselves. So it's an exchange like any traditional exchange, London Stock Exchange, or a crypto exchange like let's say Bitstamp, for example. But on Bitstamp, you trade. You can use the US dollars, fiat currencies that you have, to buy some cryptocurrency. So this is what we call a spot exchange, and we can say on a higher level of the economic infrastructure of cryptocurrencies, we have an exchange of derivatives. And derivatives are instruments that can be used to trade in time. So, for example, a futures contract allows one person to fix a price of a cryptocurrency in a future point in time. And it creates an obligation between those who have traded that contract, so that one has to sell and the other one has to buy. And options are similar, but you can think of them as some kind of insurance when you are not obliged to execute that transaction at the future point in time, but you have this optionality, hence the name of an option. And it creates immense opportunities, like you can use them to hedge, you can use them to manage your risks. They are leveraged, so you can use them to increase your profits and liquidity. And also, of course, the most important aspect for us, which is providing a tool to manage the risk of volatility, which is inherent for cryptocurrencies. So using derivatives, futures, and options, you can hedge against volatility.
That's actually like it's a very complex subject to ask somebody to break down in simple terms. I don't think you could have done that better if you tried. So that makes a lot of sense. What I want to do is just extract something there, because I know people on LinkedIn are going to find this very interesting. There's a lot of startups out there who are considering using things like Bitcoin or Ethereum as, as a means of exchange of value. So to offer a community a way to pay them in cryptocurrency. You also have people who are mining things like Bitcoin, etc., to try and make profit. Now, one thing you mentioned is about fixing the price. So I can make an agreement with you where, hey, I want to fix the price I'm going to pay for Bitcoin, or I'm going to sell Bitcoin at a determined date in the future. And by doing that, I'm basically buying insurance against price movement. Because if I have, say, a retail store or a product where I'm now accepting Bitcoin, I'm now nervous because Bitcoin's price against the dollar can be hugely volatile. But if I buy insurance against that price movement, I can actually sleep at night, because if I'm losing money on the value of Bitcoin, I'm gaining money on the value of this agreement, this contract, this insurance contract. And that's actually what you're selling here, is insurance basically against volatility. Is that a good way to sum it up?
Exactly. And another very, very interesting example, and I think this is very much about what has happened recently, are you've mentioned miners, you've mentioned someone doing business in crypto, but also ICOs. Let's say someone did a huge ICO, they've raised millions of dollars, I don't know, at the beginning of this year, last year, and we usually hear the number of dollars that they've raised, but most of these funds have been raised in crypto, so either in Ether or in BTC. So the number we've heard was the spot value of the cryptocurrency at that time. And as we know, the price of cryptocurrencies has dropped recently quite a lot, and all these businesses, they are operating in the world we live. And as of now, still you have all the expenditures, like if you're hiring someone, if you are using some cloud computing or whatever, you have all your expenditures in fiat currencies. So they've received cryptocurrencies and they have expenditures in crypto. So this is a great example of someone who is exposed to the volatility. If price of crypto falls down, that the assets that they are holding are worth less, and then it turns out that they've raised like a couple of millions, and then after some time it's just 10% of that. And this is a great great example where hedging would be useful, because if such a project who did ICO would, if they hedged either using futures or options, they would protect themselves against this price fall and keep the value of their cryptocurrencies either constant using a futures contract, or insured against price fall using an option still with the upside potential. And with the recent market crash, I'm mentioning specifically this example because I believe a lot of people have learned a lot from this crash, and one of the lessons has been that you need to manage those risks associated with cryptocurrencies. And now it's a bit unfortunate that it's now or not a year ago, we hear about those projects that they start to think, oh, we should have hedged. There are instruments like futures and options, and you can hedge. It's good that they start to think about this now, but it's unfortunate that they didn't do it earlier. So it's very interesting. and we see this real life use cases for cryptocurrencies and people who really need that. And on top of that, we see a lot of interesting business development, like those people coming to us and starting to talk about crypto trading. Even some of them thinking about developing some OTC markets in derivatives together with some market makers, prop shops, hedge funds. So also a lot of interesting things happening here currently.
Your point on the ICOs has blown my mind, actually, because you're right. There's so much volatility in the funds you're raising for us. It would be like raising money for a startup business in US dollar, and then the US dollar loses 80% of its value overnight. How you can, and your investors also own, they have a stake now. And so, wow, yeah, that makes a lot of sense. There's really going to be two people, I think, who will be interested in this statement of yours. There's the trading community, and there's the community in terms of ICOs, business startups, miners, etc. Where what I would say to the trading community is we're talking about futures and options using leverage here, which can be very dangerous if you're trading. It can also be very useful if you're trading, depending if you know what you're doing. Then there's the business side, the ICO fundraising side, where that leverage, in other words, you're paying a little bit of money for every for every point that Bitcoin moves in a direction, you're getting X times that movement back. And that means that basically you're paying this premium to basically hedge yourself, meaning that you're not actually having to fork out, 50 grand for the sake of 50 grand's price movement. It could just be 5 grand you're forking out for the sake of 50 grand's price movement. So we're using leverage here. For traders, that can be dangerous and also good, depending on the strategy. But for businesses, this is the real key, because this is the insurance product over here. You're paying a little bit of money for a lot of protection, is basically what you're saying for ICOs. And I find that mind-blowing. How many people would you say, how many ICO startups now, if somebody's starting an ICO, what is the percentage likelihood that they've even thought about protecting this investment? How are you even raising awareness for this right now?
Well, I believe it's quite a difficult question. Some market research would be useful, but as we've heard back a year ago in 2017, like more than 50% of ICOs didn't disclose their roadmaps in white papers, so on and so forth. There are some interesting statistics already popping up about this. So that the topic of derivatives hedging, as you've mentioned, it's more advanced, and I believe therefore also more difficult to track. But I believe if more than a year ago, just a very tiny percentage of people who have been previously in finance would have thought of that, because back then everyone knew that if you are into crypto, then you don't sell. What do you need to do to earn? You just need to hold, because the price of crypto is rising and it's gonna keep rising. Which of course everyone that has some more background in finance knows that it's not the case, and I believe now everyone has learned that. So so hopefully, I don't know the statistics, but hopefully more and more people are aware that if you are everyone sees it, that if they raised some time ago, now they would have 10% of that, 50% of that, and so on. I think that what might be problematic here is what you are also mentioning, which I believe is education. So people knowing that they can do that, like this being an unknowns, that you can even do something like this, like hedging. I believe people might not be aware of that, because I believe one of the characteristics of the crypto industry we are in is that it still has a lot of people who are very good at technology, and I highly appreciate that. In technology, cryptography, I myself have technical background, so I love it a lot. But I think that there aren't that many people who have experience in finance. And crypto is directly related to finance because it has created that whole new financial market. So I believe it's good that the awareness is increasing, and I think it's one of the best things that you do on your channel, educating people about that.
No, I agree. I think education is absolutely fundamental. It's interesting because I know on the LinkedIn community as well, there's a lot of people in the network who are finance people. And I watched the talk you did, again, you know, the link you provided to the presentation. Something, you know, I learned a lot from watching you do that talk. And one of the things that blew my mind was the change in the trend of volatility. You know, and when we're talking about volatility, we're talking about the price volatility of Bitcoin, you know, being very, very high and crashing and going up and down. One of the things that you mentioned in that talking to the finance community now is that the trend of volatility is actually trending downwards. And you mentioned that this is because when you bring futures, et cetera, and hedging into a market, it actually lowers the volatility. And so we've actually seen the price volatility of Bitcoin drop. Can you talk a bit about like how that works and how, you know, platforms like Quedex can help lower volatility on the price of Bitcoin? Because you're actually changing the market here, which is mind-blowing.
So this is a very, very interesting topic, and it's much easier to state what we see, that volatility is decreasing over time. And it's much more difficult to say why, as always. And it would be great to do some proper research on that, and hopefully one day we will have some time for that. But generally, from what we've seen and what we've observed on the market, generally the whole crypto sphere is getting more and more mature, more capital gets deployed into that, more enterprises, more people are involved, the adoption is growing. So I believe this whole phenomenon is also helping decrease the volatility. And one of the constituents of how the market evolves is that the market of derivatives are developing. And now, coming back to your point, why derivatives help decrease volatility in particular, is I believe the first point to note here is that you are able to short. So let's say you are just holding cryptocurrencies for your own. And if you are expecting a price drop, then if you only have the spot market, then the only option you can do is sell on the spot market. So it immediately has an impact on the spot market. And it also has some other consequences depending on the jurisdiction you are in. So if you go back to fiat, you may have to pay taxes, so on and so forth. And then if you have a derivative, you may hedge that value with for example, futures contract. So let's say you hold one Bitcoin and today it's worth like around $4K US, and you want to hold that value for, let's say, 3 months. Then you go short with a derivatives contract, appropriate number to hedge that one Bitcoin, and it will keep value of your Bitcoin constant in time. And we are a crypto-centric exchange, so only crypto deposits and withdrawals are possible. Everything is calculated in crypto. So you deposit a fraction of the Bitcoin you hold. This is what you've mentioned earlier, that with derivatives trading, you have leverage. So this is margin trading. So in order to hedge this one Bitcoin, you only need a tiny fraction of that deposited into an exchange, and you can hedge that whole value. So this is a great risk management tool. And now, instead of going into the spot market and throwing all that Bitcoin on a spot exchange and moving the price, if you had a lot of that Bitcoin, you move the price a lot, you've hedged using a derivative, which didn't have a direct impact on the spot market. So you can short sell on the market of derivatives, which we think is important. Another aspect is what leverage brings. It provides additional liquidity. So as you've already mentioned, with this tiny amount of Bitcoin, you can trade larger amount of Bitcoin. So this increases liquidity, and generally increase of liquidity correlates negatively with volatility. And one of the other aspects is that when you are trading a futures contract, you are basically trading a price in the future. So this is the expectation that the market has to the value of Bitcoin at some point in time in the future, at the expiration of the contract. So it also helps to discover prices. If you ask a question, what will be the price of Bitcoin in a week, then you may look at the weekly futures contract, and this is the best expectation that the market has about price of Bitcoin in 1 week. So there is a number of different ways, I believe, that derivatives help decrease liquidity, but generally, to sum it up, I believe it all boils down to the fact that this is a risk management tool. So it helps to hedge against that volatility, and therefore the market becomes more mature, the volatility dampens, and the businesses can develop.
One of the things I know for certain is so many people, because this is more advanced, as you mentioned, it is more advanced, it causes a bit of a barrier to entry. So what I want to do is kind of repeat something you mentioned there that I think a lot of people might have taken for granted in what you were saying. And I want to just bring it to light because I think it's a very important point you make. So especially for the traders watching this, you know, you can make money as prices go down with very little risk. You know, this is one of the points here is when you're hedging against price movement, the reason why, if you want to keep Bitcoin at 4K in price, let's say that's the price you want to fix over time, is because that contract that you buy, say on the Quedex platform, let's say it's an options contract, whatever it is, I don't want to get into the technicalities right now. But as that price goes down, the price of Bitcoin goes down, that contract increases in value. So, you know, what we're talking about here is, let's say now you're a trader, you just want to speculate and make money on price going down. Before, what you would have to do is short. And for those of watching this who don't know what shorting is, you can make money as prices go down. So for example, it would be like me saying to Wiktor, hey, Wiktor, I don't know whether he drives a BMW or not, but I could say, hey, Wiktor, can I borrow your BMW while you're on holiday? Wiktor goes on holiday, I sell his BMW now, and I buy it back when he's back from holiday at a cheaper price, and I've made that gap. That's pretty much how shorting works. And the problem with shorting is, you know, if you try to make money when something goes down, but the price moves against you, your loss is unlimited if you're doing it on the spot market. But when you're using a derivatives contract, like an options contract, you can actually have a fixed amount of loss. So you can at the very start of partaking in this, fix this amount of loss for pretty much like unlimited gain, as long as, you know, up until that price could hit zero, you could gain money. So you can make money when prices go down, fixing your risk. And the other thing is, you don't even need a stop loss. So for the traders out there, you don't need a stop loss, because what happens is this works over time. So if the price moves against you and then back in your favor, you've not stopped out. You're still in the game, and you can manage your money in the trade. So I just wanted to bring that out, Wiktor. Sorry, I know I did a lot of talking there, but I think I really wanted to make it clear to those on the call. This is why I got excited about options and Quedex, because you can make money when prices go down as well.
Exactly. I think that's very important, and one day we may create a derivatives market on BMWs as well. Or Lambos.
Or Lambos, depending on what happens with the crypto market. You know, I was going to ask you on that point, Wiktor, as well, because I know a lot of people watching this are going to have in the back of their mind, you know, are cryptocurrency prices going to increase? A lot of people who, you know, bought into the FOMO back in December, got very excited. There was a lot of hype, you know, because you could just buy into crypto and you made like, you know, 200%. It was like a given. You know, and obviously then we saw the market crash. We saw that bubble and that crash. Do you feel from being in this market that there's a driver to say that crypto prices might go up again? Do you even think it matters if crypto prices go up again? What is your feeling? Yeah.
So, well, to be honest, I don't like to make predictions. So making predictions is trading direction of the price, and I prefer to trade volatility. But yeah, well, generally, to make a general comment, I think that cryptocurrencies are rather cheap right now after this price drop, or have been some month ago. I'm worried about things like Bitmain and what's going around that, and whether it will influence the market or not. But generally, I don't think that price matters that much. I see the current situation also very positively, because as I've already mentioned, people have learned a lot, and that the projects that were really rotten apples of crypto environment are now out. So I believe it's better for the industry. People are now really concentrating on doing business, and I believe this is also one thing that you've been mentioning in your YouTube channel, that there is a lot of happening when it comes to business development in crypto, and we see that also around our exchange, like partnerships that we are making, people we are working with. There is a lot of prop shops, market makers, algo traders popping up around the world, more and more of them. Like I've mentioned, ICOs becoming interested in trading, and some of them who are doing actually good business are building great products. So I think that's all very important. And one thing that I also wanted to mention is that if you're looking at the crypto market in a long-term perspective, then if we compare the situation that we have now with what we had 2 years ago at the beginning of 2017, was it about price of Bitcoin around 1K, I believe, and currently we have almost 4K. So if we look at that in that perspective, in perspective of 2 years, and we did 3 or almost 4x on the price, then sounds quite good.
It's doing pretty well, you know. It's doing pretty. And this is what I was saying, I think as well. I was at an event recently, and somebody had said, "Hey, you know, Bitcoin's price has crashed." I'm like, no. When you look at like Metcalfe's law, when you look at the amount of adoption, it's actually very well correlated. You know, it might be slightly underpriced compared to that adoption, but it's only a rough figure. You know, so no, I agree. One thing you mentioned there was very interesting is, you know, there are more players coming into this market. That's really the takeaway there. And what that means is money is flowing into the market. And when I think about that, you know, having futures and options is extraordinarily useful, because it actually tells us, it gives us a metric that we can track here called open interest. And I think that, and I know, Wiktor, you're aware of this, this is more for the listeners here, or the people watching this. open interest tells you how many open contracts there are, meaning it's an indicator of how much money is flowing in and out of the market. And I was just recording a series for the YouTube channel looking at open interest on the BitMEX stats. You know, how much money is flowing in? Money is coming into the market. Now the question, and I know you can only answer this to a degree, because there's going to be a lot of sensitivity in terms of who you're working with Quedex, etc. So to the degree you can answer this, the question is, what money is flowing into the market as well? Do we have institutional money coming in? To the degree you can talk about that, what do you feel? What is your gut feeling here, or your experience telling you is happening from an institutional side of things?
So I think that's another very important thing when it comes to development of the market recently. We see actually a lot happening here. Actually, as we are already operating in a kind of sandbox environment, but already operating for 1 year, we were quite surprised about the level of institutional interest that is already out there. We were expecting that to come, but it was a bit surprising that it is already there.
Wow.
We generally see the whole crypto sphere transitioning from kind of gray area, uncertain area, to a more transparent and regulated environment, which is something we see as positive. And as you already know, we are looking to be licensed in Gibraltar ourselves very soon, and this is something very important for us, adding to the transparency of the crypto market, providing assurances against market manipulations and generally assurances to our customers. But this in a broader picture, it shows that serious players are becoming interested in the market. I don't want to say that this will be that crypto will institutionalize and there will be no smaller players and no, we won't see that kind of crypto environment that we had so far. I think that both are important, that it's good to have that environment of crypto which is independent. This is what Bitcoin is about and why it has been created. And it's good to see regulators and institutions recognize it as a technology and as an alternative asset class. This is one of the things that I've heard mentioned on the token market conference by the founder of Bank to the Future, Simon Dixon. He said something about regulatory arbitrage, that it's good to have that independent crypto because it's a challenge to those who want to regulate it and those who want to be transparently in the space. So I think both are important. But we are in the transparent space, wanting to attract institutional clients. And coming back to more of a statistics, then if we look at the developments at Quedex for 1 year, there has been quite a lot of institutional interest in the space. There are both those who are already in crypto or have been in crypto and have been doing trading, market making formally. They are now setting up prop shops, hedge funds, and institutionalizing. Some of them made a lot of money and they are really good at what they are doing. So I think this is one trend. And the other trend is we see the institutions from the traditional financial market coming into the crypto space. And here, even some billion-dollar plus hedge funds from the UK, or rather they're crypto spin-offs because they are not trading crypto themselves. they are really coming into the space, and we see that happening in the industry. That's all generally very positive, and the numbers that we sometimes see, like that there are some companies who have started to do some more institutionally oriented business, for example in London, since I don't know, a couple of months, half year, already are dealing with hundreds of institutional customers. So the interest is really there, and we think that's positive, because it means that the technology, there is adoption of the technology as cryptography, which is great, and there is also adoption of crypto as an asset class, which we also think is great, and it will help develop the whole environment. There is more capital coming into the space. And well, of course, we hope to, as one of the early players in the market, we hope to attract institutional interest, and we already see that happening, and hopefully that will continue through the coming years. And I believe this is also consensus among quite a lot of knowledgeable people in the crypto space.
I think that is the best news I've heard all week. If I'm honest, I think a lot of people who are listening to that, who really paid attention to those points there, will have a lot of comfort from what you've said, because I know from being in the space behind the scenes, more on the business side, and I know from you being in the space as well, you are seeing institutional money, and you're seeing, corporate money. We're seeing actual adoption and traction, which is what the market needs to move forward. So that's really everything there. Just gives us, I think we can all breathe a little bit and think, okay, this is real, it's working. One thing I would say to anyone who is concerned as well is, in my experience, technology never moves backwards. Cryptography and cryptocurrency actually solves real world problems. And there might be only few cryptos out there really solving problems compared to the amount of ICOs out, but it solves a problem. And once the technology is out, it doesn't go backwards, it only moves forwards. And you're actually going to be a proponent, or Quedex is a proponent of allowing businesses to get involved, because now they can hedge against volatility. So I wanted to ask, what is the vision of Quedex? What is your vision for Quedex, over the next 5-10 years? If you could paint the perfect picture of Quedex achieving its goals, what does the future look like for you guys?
Mm-hmm. So we hope to become the go-to platform for derivatives trading, the most important independent platform, and doing that by being a transparent and trustworthy business. Generally, we've spoken a lot about the product side of what we do, so the offering that we have, futures and options, which is quite unique in the space. But we also put a lot of attention to how we do it. So being trustworthy and being transparent, and providing a tool that actually meets the needs of the market. And this in a way that we usually say that we are secure in 3 different ways. So as you know, there have been a lot of problems with exchanges through the time in crypto, a lot of them hacked, a lot of them manipulated, a lot of them not being trustworthy and transparent and open. So we think that even this year, we've been very long in crypto. There has been Mt. Gox, but even this year at the beginning, or last year at the beginning of 2018, a lot of high-profile hacks happened. So it's I believe that's a bit of a shame for the industry. We are here for so long, so we should have learned something. That maybe making money quickly isn't the best way to go. Maybe it's also good not to get hacked. So IT security and security of customer funds is one of the paramount things for us. Another is security and safety of trading. I won't dig into technical details here, but we have sophisticated risk management mechanisms that make our place really suitable for both those who need to hedge and those who have more active or speculative interest in crypto trading. And the third thing that we've just been talking about it, which is regulatory and compliance certainty and security by being licensed and regulated. And I believe as of now, not everyone might appreciate that fully what that means, but basically, if you are trading on an exchange which is domiciled in Seychelles or Belize, if they run away with your funds, you may try to chase them. If there is some market manipulation, then, well, yeah, you may try to make some noise on social media. But actually, if you're trading on a regulated exchange, then there is some authority that you can go and appeal to. Even if you are an individual customer, you can go to the regulator and say, look, these guys are doing something bad. Please do something with them. And so I believe it gives a lot of certainty to the customers trading on such a platform. So yeah, generally I hope that these factors will help us achieve that vision of being a go-to place for crypto derivatives trading by being a very trustworthy and transparent business.
Yes, indeed. I mean, I love, the fact that security and regulation has always been a focus to you. I remember when we first spoke about a year ago now, or even longer, I don't know. It was longer than a year ago. And the thing that you mentioned on the phone was, hey, regulation, like we want regulation. And this is when crypto was booming. There was all this FOMO in the marketplace and no one cared. Everyone was like, hey, it's the Wild West. Let's make a lot of money. You were one of the only people, one of the only businesses out there. And I remember it clearly going, we know where this goes. Like, yeah, it's great that, crypto is so popular now, but our focus is regulation. And so you were, in terms of a thought leader, in terms of a business, you were ahead of the curve. There were a lot of other startups in the space who really weren't concerned with that at all. And I think it'll bring a lot of people confidence to know that, the regulation is really what you're focused on. The security is something you're obviously very focused on. One last question in terms of what are you focused on is going to be around, when can I start hedging Ethereum on Quedex or any other altcoin? What is the roadmap, do you think, in terms until you're at a point where you can start considering other asset classes on it?
So that's a very, very important point and relates back to what we've already spoken about. When it comes to the roadmap, we hope to release some new products this year. Hopefully, something will happen by the next quarter. And generally we think that both the major cryptos are important, like Ethereum, Litecoin, and so on. But what is also interesting, and we didn't realize it fully, but we actually found some interest in the market, is that there is interest also for derivatives for smaller cryptos and tokens, because it gives stability. And if you have some coin or token that has some real utility, and I'm speaking here about real utility, not all those who claim
yeah, exactly.
tokens just for the purpose of raising money. But the ones that have real utility, they might have their utility increased if there is an ability to stabilize their value. And it was quite surprising for us, but we've met already a number of projects who have issued tokens, and they are interested in that. They are seriously interested in that because they see additional utility for the users of their tokens if there is a derivative that they can stabilize the price. So maybe it's not a stable coin killer, but kind of an alternative to stable coins that is also viable. We will see where it goes, but this is also one of the plans that we have.
Wow, I wasn't expecting that at all. That's almost like Christmas has just happened again. Number one, I wasn't expecting within the next kind of quarter time frame. So that's very exciting. You know, the whole topic of stable coins, we could do a whole video on stable coins itself. You know, there's a lot of concerns out there right now. I'm sure you've heard with Tether, etc. For those watching this who don't know what a stable coin is, just imagine having a coin always pegged to the dollar, for example. So, Wiktor, the last question I already have is, there's going to be people watching this from either a trading perspective or maybe, you know, more from a commercial perspective, where they're going to want to know, how do I work with Quedex? How do I learn more? Where can I go to understand this better? What would you say to those people? What's the best way to get in touch with you?
Sure. So the first way is, I believe, and it's a great way, is go and watch some of your videos, which do an excellent job on explaining derivatives and also a bit about our trading platform. But of course, you can also visit our website, Quedex.net, and there is some both documentation, technical documentation about the details of contracts and everything that we've spoken about, and also some tutorials, some video tutorials and some tutorials written down. So there are various possibilities that someone who is new for them to learn something, and we are planning to expand that section. And if you're interested to onboard on our platform, then it's also available under Quedex.net. If you are interested to do some paper trading, then please reach out to us. We have some demo platform on test.quedex.net, which works with testnet bitcoins, so you can play around with some paper money. And of course, if you are interested to get in touch directly with us, then please use the contact details on our website, or just find us on social media. Yeah, we are happy to speak about doing business together or help you start trading.
No, excellent. Thank you. I would also encourage, so actually you've given a lot of different ways people can learn about this area of crypto and blockchain and the Quedex platform as well. The demo platform is obviously very exciting from a trader's perspective too, or somebody who's never really, you know, ever used a derivatives contract. So go and, you know, practice there. That's great value. The other thing I would say to anyone watching this is put in comments. You know, comment below. What is it that you didn't understand or you want to know more about? What is it that you'd like to see on the Quedex platform? You know, your feedback is immensely important as well to folk like Wiktor, myself, so that we can help navigate and push this market forward in the way that benefits the community. So please also put in comments. Wiktor, I will put your contact details from your site here into the video as well to help people get in touch more easily if they need to. But again, brother, I just wanted to thank you so much for your time. You gave an immense amount of value in this interview. If I had known it was going to be this good, I would have woken up even earlier this morning. So thank you so much for your time, and we look forward to hearing from you and seeing how it all develops.
Thanks for having me. It was great.
Absolute pleasure. Take care and talk soon.
Thanks. Bye.